It's Wednesday, April 21st. This is Street Live. I'm Katherine Ross, and I am joined by Jim Cramer. Jim, what are you watching in the markets? We do have the Dow, the S&P, and the Nasdaq higher.
Well, I mean, I want to be careful here because I don't know whether we're on quicksand or not, and I say that because I'm beginning to wonder, how much you trust the bond market, and I say that because the 10-year Treasury is you get the most interest of any major developed country. And that may be what's driving rates down, not the idea that the economy's slowing. The economy's slowing was what drove things yesterday. Now we seem back on to the reopen trade, but it needs to last today. I don't want to see it go away. It needs to last. And I'm worried because I see some things like Google are down, Broadcom down, Disney's down. We need those to reverse. And then I will feel much more comfortable. And the reason I say that is because oil's down, which is often regarded as being an algorithmic reason why you have to be more careful on the opening trade. And it's just, United Parcel down $1.50. That's not supposed to be happening for reopening. So I am on the fence right now. I want to see certain things happen that make me feel that I have more conviction that the 2-day sell-off is behind us, and I'm not there yet. I do like the way Netflix bounced. I said that could happen on Squawk on the Street. That matters to me, but I need to see the reopening trade come back and come back strong, and I'm not so sure whether I'm going to see that.
Well, and I think that feeds right into your real money column from yesterday afternoon, Jim, which was titled Back to the Market That Baffles. You said that the era of stocks only going up is over. So I'm wondering what you think that means for the overall market going forward.
My friend Dave Portnoy, Dave is really one of the great, I don't want to call him an entertainer. That's how people make fun of me, entertainer. One of the great thinkers of how to be involved in the media, not play the media, but be involved in what I regard as being a trenchant way. I think that Dave, when he first started, when sports was blocked, so he went to stocks. He said every stock goes up. When you buy a stock, every stock goes up. Now, if you go back and look of when he bought and when he got in, it was very prescient. And we could make fun of him and say he didn't know what he's doing. I choose not to do that. He basically said stocks go up. It was empirical, and they did. And that period has ended. And when you get back-to-back sell-offs, coupled with the fact that the SPACs have just have obliterated you, and the stocks that are selling at a high multiple to sales, not earnings, and the cruise ships, and the end of the GameStop phenomena, what you end up with is a group of people who are very dissatisfied with the stock market, because it no longer just goes up. And in keeping with the way things worked out with Dave, sports came back. So he basically is 1-for-1 with stocks. And the rest of us are stuck with this damn market and recognize that the NASDAQ has become very fragile. The NASDAQ.
Well, one thing, it's interesting that you point out the NASDAQ, because I wanted to point out one thing that Dave Portnoy got right months and months ago. What was that, 8 to 10 to maybe even a year ago at this point? He was already looking at the reopening stocks. And so we've been focused on this headline for a while, but I'm wondering how this rotation out of the stay-at-home favorites that we've seen so far kind of feeds into your thesis about the ongoing market separation, that we've got two markets, which you've written about extensively on realmoney.com.
Well, I'm glad you recognize that. Sometimes I feel that people don't get it. I mean, the two markets are really markets that are the ones that are winning and the ones that are losing. And the ones that are losing deeply reflect a level of rigor that is not in keeping with what you need to be in the market. And the segment that's winning is using the classic playbook of what happens and the shift into other stocks that more reflect the into a Dover, which raised numbers. Now, in Confessions of a Street Addict, which was my first book, I wrote extensively about what happens in a rotation and how I chose to ignore the rotation because I said that I can handle it and the stocks will come back. And it became such an issue that when I was down 9%, I had, which is a lot of money when you're down, when you, let's say you're invested, $5,000. I mean, you're down, appreciable amount. It's down 10%, especially when you were making money. And what I had to do was switch and embrace the rotation. And that saved me. And then when I made enough money, I was able to stop being in the market, and then the crash occurred. So it was really, I managed to make the money back, and the crash occurred. So I ended up having the year of my life versus what everybody else had. And what I want to emphasize is that when you see the NASDAQ opening up and then going down, that's those people again. That's that half. And I wish that I could just grab that half by the neck and just say, you've got to stop this. You've got to embrace the rotation. Please go read Confessions of a Street Addict, and you'll know why. And look, it doesn't matter to me. I get like some royalties. I'm just saying that it really tells the truth about a rotation and how you ignore it at your own peril. And right now, people are ignoring the rotation at their own peril.
So, Jim, I want to turn our attention to a slew of earnings reports, because that is also one of the things driving the market right now. And I really want to start with Netflix. And this is based on a tweet that you had where you said that it is the weakest of the FAANGs. Now, for those of you who missed this earnings report, they did report fewer subs, 1 million, which fell short of expectations for about 4.8 million. Yes. So, Jim, do you think that maybe it's time to consider replacing Netflix and FAANG?
Wow, what a great question. I still think Netflix comes back. I believe in the 800 million TV versus 200 million sub story that Reed Hastings talked about. I think the slate of production kept them from being the water cooler play that gets more people. United States may be maxed out. I know he doesn't think that. That's something that could very, very well be the case. And I'm thinking about what would replace, when I came up with FAANG, okay, when I came up with FAANG, it was about the notion that there were certain stocks that were unstoppable because management had such a big runway. I think that there could be a runway for Reed that we're not thinking about. Because one of the things that's about FAANG is that it's constantly morphing. So the people who are betting against FAANG don't understand they're betting against a moving target. And every one of the FAANGs is a moving target. So I'm not buying the notion that Netflix has done. They are a moving target, and they will come up with what's necessary. And if I did feel that they were not a moving target, then I would pull them out. I'd pull them out and replace them. Now, obviously, Microsoft is not in FAANG. I've always had to say N the M, Microsoft. It doesn't, it's not alliterative to take out a Netflix and put in an M. FAANG. But I definitely think that you're right to be on a watch for Netflix, but I'm not willing to write them off yet. No,
well,
I'm not.
To that point, Jim, I do think that what you said about Reed Hastings saying that the U.S. probably hasn't been tapped out, with what they're doing to try to make sure that people aren't sharing as many passwords between Netflix accounts, perhaps that would add more subscribers. So that is definitely something
I'd
to
be
watch.
so pissed off if they did that. Oh my God, that would be so pissed off. Versus all the other services that I have. I don't want them to do that. And I know that Reed is really committed to customer service. That'd be very bad, very weak, very weak. Let's not forget, Lupin drove subs worldwide. Whenever they make a movie that's at the locale, they do well. And there just weren't enough Lupins. I saw it twice. I loved it. I feel that where they're going wrong is strictly because of COVID. Now, they lost the pull-through from COVID. They say that many times, 3 times. but they didn't get the benefit of the opening of the world, which is going to produce some fantastic content. So to write them off now, after they de-risk the situation, I think it's a big mistake.
Jim, your mad dash really intrigues me this morning, and it's because it's a company that I don't think you and I have ever spoken about on this show. I don't know that it's the one that we really heavily cover. ASML was your mad dash. It did beat on earnings, but the company, with this company not being something that people are familiar with, I'm wondering if you can give us your thoughts on it and whether or not you think that investors should look at this company closely. Absolutely. For a buy.
Okay. ASMLF makes gigantic machines, size of a bus, that are integral to creating memory chips and integral to creating logic chips. Pretty much any chip that is lower level runs through ASMLF. They had thought that memory was going to be up a little bit. It turned out to be up a lot. They thought that logic was going to be up a little bit. It turned out to be up a lot. There's no way they can make what's supposed to happen. A lot of it was this quarter. So then the question is, how much of the demand is enterprise and it has to be filled? How much of it is consumer and we're going to be able to get all the PCs we want and then we'll be done? It's not clear. The hope of the people who are saying that there is that the chip shortage could be alleviated or ameliorated are really sticking by the notion that the personal computer business, that is just a bump and that will be over. But no matter what, ASML is really at the heart of the shortage. They just can't make enough buses. The stock is up 22 points. It's up 28% for the year. I mean, this is an unbelievable company. It's a Dutch company, but it's an American company. It's Dutch, I think. But it just shows you, when you look at the breakdown, South Korea, Taiwan, China, that's who's buying their machines. We only represent 3% of the machines that they sell, and that's why we're in such trouble. We're not a producer anymore of semis. And ASML holds the key. It's also going to mean that Lam is going to be tremendous, and KLA will be tremendous. Lam, I think, is going to do even better than ASML, and Lam is reporting after the close tonight. And it's only
that'll be a stock.
It's up 14. Goes higher.
So that's a stock for investors to watch tonight. Jim, I also think that a stock to watch, and a stock that we're going to talk about a little bit more over on Action Alerts Plus. The next two stocks actually are going to be discussed further in depth in Action Alerts Plus. But Apple, because of their spring loaded event, I wanted to bring that up, Jim. I mean, they did unveil a new iMac, iPad, and the new Air tags. So what was your takeaway from this event?
My takeaway is that for the first time, we are seeing the PCs and the Macs, perhaps having an impact on earnings. Goldman Sachs says they will. Goldman Sachs has to sell on. And I do believe very strongly that there's going to be an impact, because Katie Huberty says there's an impact. And Katie Huberty is absolutely spot on. She's amazing. And she has got the bead on Apple. If she thinks that these new products are going to play a role, then think about it. You've got cell phones. You've got service revenue. You have wearables. And now you have returned to the original Apple, which is the hardware when you go into their stores, the Macs. That would be incredible. If they have a four-legged stool, I think that'd be fantastic.
And finally, Jim, I want to hit on Boeing, because it was your stop trading, but also we covered the news yesterday.
Go ahead.
We covered the news yesterday that CFO Greg Smith announced his retirement. I wanted to get your thoughts of whether or not we're going to continue to see this stock under a bit of pressure until we kind of get the successor announcement.
No. Here's what's going to happen. Greg Smith was an operational CFO. Everybody on Wall Street knew that, for the most part, given all the turmoil, that Greg was calling the shots. Greg has ingrained upon the owners that there will not be a gigantic equity offer. That's why when he announced he was leaving, the stock got hit by 10 points. Because people are not sure where Calhoun is. If they pick a traditional CFO, and the CFO looks at the balance sheet, that CFO may very well say, we need to raise the equity. So the stakes are very high here. Obviously, all the investment banks want them to raise $5 billion in equity. If they raise $5 billion in equity, the stock's a $200 stock. I'm not sure what they're going to do, but I do think you're onto something, which is that until we see the CFO, we have to expect that they might do an equity offering when the CFO comes in. So I'm not going to say it's over and you should sell Boeing. I'm saying it could get to 200 because people think that they're going to do a deal, and then it stops, they do the deal, and then it goes higher, especially if they get a China order. So I am reaffirming that I absolutely like Boeing, but I think you're right. A new CFO, more traditional CFO, might go to the board and to the CEO and say, we do not have the ability to make it through this period, so let's do more equity. And that'd be a huge bummer. But if the stock's at 200, maybe we can handle it.
Well, and for our viewers watching right now, because I know that so many people have the question of if it is a buy right now, we're going to save that because we're going to head on over to Action Alerts Plus and we're going to discuss what Jim's thoughts are at where Boeing is right now, what you should be doing. So come join us there on actionalertsplus.com. I'm Katherine Ross, and we'll see you tomorrow.